Okay, let's do a quick market review. I know with all this market volatility, you guys are probably wondering, is a bottom in place? Are we going to make a new low? Are we still in a bull market? What's going on? So let's talk about it. And of course, we're going to use Alex to help us out. Alex from Macro Ops. If you are a professional trader, definitely go check out Macro Ops. Okay, so in the last video, if you remember, we were looking at these four charts. So in the top left, you see the percent of stocks above their 50-day moving average. And we wanted that to fall below the 20% level. So in this green zone right here. Now, what we're looking for is for these indicators and charts to hit certain oversold levels because that'll tell us that the bottom is in. So for the percent of stocks above the 50-day, we want it to hit below here. That means less stocks above the 50-day. It's very bearish, likely signals a bottom. We were also looking at semiconductors, and when we last looked at it, it was bouncing off its lower Bollinger Band, and we thought maybe it would trade lower from there. And the idea was because semiconductors, they kind of represent the risk in the market. We wanted them to bottom and then go higher because that means investors are willing to buy stocks again. It shows they're taking on risk. Then we wanted to look at the breadth of the market. So this is the advanced decline line right here. If it's trending lower, that means there's more stocks declining than advancing. And we did want it to go lower because if it goes low enough, that's where you get the bottom. So we wanted it to hit this green line below here. Then we were also looking at the total put to call ratio. We wanted to hit this green line up here because that means tons of people were buying puts, and that's a signal that there's extreme fear in the market because a put option is the right to sell. So if people are buying puts, then they think the market is going to go lower, and then they'll make a profit because their put gives them the right to sell at that higher price. So once again, if this line hits this green level, that shows that there's extreme fear in the market. So it's another type of sentiment indicator. And remember, sentiment is kind of an inverse indicator. If everyone's really scared, that's likely the bottom where the market will turn higher from there. If everyone's really excited, that's likely the top. So extreme fear is actually a good thing for us if we are long equities. And in Macro Ops, you also know that we have our own proprietary composite sentiment index. In this, we wanted to see fall below this red line because again, it signals that there's extreme fear, and it also shows that there might be a bottom in place. So in that last video, we explained that until all these conditions are met, we'll likely chop sideways or go even lower. So now let's check on these indicators and see what happened. Okay, so the percent of stocks trading above their 50-day moving average did come down a little bit, and right now it's near the previous lows. And this is actually the June 3rd lows where we had the bottom of the previous 5% sell-off. Now it is near that bottom again, but it's still above this green area, which indicates extreme oversold conditions. So this is bullish that it's near this bottom, but it's not as bullish as it could be. Next, we got these semiconductors over here. You see last time, it was bouncing off this Bollinger Band. We thought it might chop sideways or go lower. It turned out it actually did bounce and go higher. So if semiconductors are picking up again, that indicates that risk on is back in the market. People are willing to buy shares, which of course is bullish. Then we got our advanced decline line right here that I just explained. You see that it finally did hit that green line and then it bounced. So that's a bullish sign. Went to oversold conditions and is now correcting itself. And our put to call ratio, I forgot to mention, but this is actually a 10-day moving average of that ratio. It went and hit that green line, that top green line, saying that sentiment was overly bearish. So that's a buy signal. And then our composite sentiment index, you see that it did go and hit that red line. And now it's at the lower levels last seen at the June 3rd bottom. Then we go look at more sentiment indicators here, where the AAII bull bear indicator, it's at the same levels that mark the bottom of the December market route. You can see it really fell here. Then the investors intelligence bull bear indicator, that has come down a bit, but it's still pretty elevated right here. And the average equity exposure, it's fallen to near June 3rd lows once again. And the put call ratios is showing extreme fear, which we already looked at that put call ratio, but this is a different way to look at it. So far so good. It looks like the bottom is in place, at least short term. Valuations themselves have come down, but they're still kind of elevated at 6.8 times next year's earnings. But a positive is that this recent market volatility is actually driven down expectations in Q3 and Q4, which markets are all about expectations. So if expectations are lower, that makes it easier for companies to exceed them. And whenever companies exceed them, that's usually when you see the stock price shoot up. So this is why Alex says it makes for an easier hurdle going into the second half of the year. So Alex says all in all, the evidence suggests that we're either at or near a short-term bottom, though it may not hold for long and we could very well see another leg lower, which he says he knows is not the best answer. It's wishy-washy, but that's trading. You can't know this stuff for sure. You put your system in place, you get your risk control in place, and that's the best you can do. And you can do just fine like that without predicting the market. But Alex also mentions that in the intermediate to long-term perspective, the conditions are setting up for another major rally in risk assets. So the bull isn't dead, it's about to launch off again. Sentiment, positioning, and liquidity have made the environment ripe for another large uptrend. Now we just need a catalyst, something like European fiscal stimulus, Chinese credit pump, real progress in the trade war talks, or an uber dovish Fed. Just something, really any catalyst. That's how markets work too. The catalyst isn't as important as the conditions. And then macro investing is all about evaluating those conditions, which is why I always turn to macro when I'm trying to evaluate the market. So Alex is saying price will probably chop around until we get one of these catalysts. Now you can see we did get a nice little rebound, but it still feels like chop. We could easily go sideways from here. We can see markets tank again back to these bottoms and then rally again. It's just going to be back and forth, which is great if you're a short-term trader, just fine if you're a long-term trader, but if you're in the middle, it's kind of tough. If you're trying to swing trade, you get knocked out of your positions a lot in markets like this. And these rallies cause people to really feel some emotions, especially if they're not in. But don't worry if you're feeling those emotions like FOMO because you're missing these face-ripping rallies. Well, don't let those emotions overcome you. And we got our free FOMO trading guide right here to help you deal with it. We got tips and tricks on how you can control your FOMO so it doesn't take over and make you do stupid stuff that makes you lose money. You know you got to stick to your system. So I'll put a link to this down below in the description and comments. You can go to it, just throw in your name and email, and we will send that guide to you. Gives you a few tools to help control yourself, which you know is the most important thing in trading because we are our own worst enemy. So go ahead, go to this page, check it out. It's free. Why wouldn't you download it? And if you want more videos on the market, and if the bear market comes, you want to be alerted, then make sure you subscribe to this channel and hit that notification bell so you get email notifications whenever our new videos come out. We're publishing almost 7 days a week, so we got a lot of great content. Subscribe and I will see you in that next video. Stay fallible out there. Bye.